Hello, hello, everyone. Welcome. I'm excited to be here today with my man Mario Antwine. Mario literally closed on a $50 million revenue acquisition about a month ago. He is now the CEO of Pearl Interactive. There's a lot to dive into. I'm Brandon Jones, the founder of Gravy. We're all about ownership, and building and carving out the path to generational wealth and helping surround folks with the ecosystem of assets, connections, et cetera, that folks need to pursue that path of ownership. And so Mario, what makes me super proud is he's a Howard guy. I'm a Howard guy. He's representing, in my opinion, a true definition of ownership. And there's a lot in his story to unpack. So I'm gonna kind of frame where we're going to go in the conversation, and then I'm going to turn it over to Mario to share a little bit about his background. So first, we're going to touch on his backstory. Who is he? Where is he from? What shaped him? What got him excited about acquisition, entrepreneurship. The second part will be really focused on his search, right? So how did he come up with his framework for thinking about, what would be in his purview and what would not be in his purview? How do you prepare for that mentally, financially, et cetera? The third phase will be just getting the deal done, right? So now he's under an agreement, and it's all about getting this thing through the finish line. And he'll be the first to tell you that it was adventurous. Would be a light way to put it. Get into that story. And then the last seat is look. The last piece is he's now in the seat. What are the challenges, opportunities that he's facing as a first time CEO of a relatively impactful company in his industry? How is he balancing home, et cetera, et cetera. So with that, without further ado, Brother Mario, man, welcome. We appreciate you taking the time in a crazy schedule to have this unpacked conversation with us on a journey.
For sure, Brandon. Well, look, I appreciate the warm welcome, and pleasure meeting everyone in attendance. So, just brief background on me. So, from Atlanta, actually live in Atlanta. So, most of my career has actually been in different areas of finance, from investment banking to consulting, doing M&A, to investment management, and then really, it was that pivot while working in investment management where there's this emergence of new tech, particularly fintechs that were out there. And if you recall, this was that innovation arc. And I always thought you never want to be behind the ball as innovation is happening because change is inevitable. So you want to be in the driver's seat of that change. And so that was actually an opportune pivot in kind of this Y intersection moment of my career that actually took me to join a company that was recently recapitalized. It was a traditional searcher who had identified this target. It's in the equipment finance world. I was coming on to lead sales and business development for that company. And really, our tool is we could score credits. We had a proprietary tool where we could score credits in about 2 minutes, and we can underwrite as fast as a day, right? As fast as 24 hours. And so these are tickets somewhere between, as low as 5,000 to upwards of, a few $1,000,000. And we can do that in a relative short order. The short is, really in that experience, it was firsthand driver's seat of building a company out, right? So we set up a tech team, product team, marketing team, et cetera. We went out, we landed big deals with companies like eBay, for instance, in their heavy equipment vertical. And Funding Circle is another where to think about it like this, it's we help expand the credit matrix of the small and medium business owner, right? So think farmers, truckers, et cetera. These were our clients, right? And so and then the other side of it is all the credit and lending facilities that are out there, right? Or lending partners that are out there, from regional banks to fintechs to other players, right? So so through that period, we actually we grew the business quite considerably, both top line and profit. Ultimately, selling that business over a period of time to private equity. Now, this is critical because this was a very successful exit, given the timing in that particular market. And so because of that, and this is, I'll just say it was in the 9-figure range, right? Just to give folks a directional, kind of sense of what that exit was like. I walked away with a nice bonus. I did not have exposure on the cap table.
Right. Right.
So that was, and when you see these numbers of folks that were building alongside you, it's not the trinkets that you get after it, but it's you really start to realize like, oh wow, this I love. For me, I stood back and I realized a few things. I love the small business world because of the impact that you have, the community feel, the team, the collegial atmosphere, that you can engender. But beyond that, the economics, right? You can participate in the value creation process, similar to you at a big company, but there's the other aspect of having that exposure on the cap table that can be, meaningfully valuable,
Got it. So you you
to you.
weren't you weren't one of those guys who read, watch the white guys have all the fun, and you said, look, I'm gonna be this buyout titan. It was more so you were an operator who had a financial services background, so you were comfortable with numbers, but you went in as an operator. You understood how to pull the levers, kind of put the playbooks in play to create value, and then looked over once the value was created and said, look, I'm not getting a piece of the action. And that was when you said,
Yep.
I can do this, but I need to be doing this, in a seat where I'm getting ownership. Would that be fair?
That's fair, and just I read Reginald Lewis' book, love the book, and for what he did in his time is remarkable, right? Because as we know, and I'll get into this story later, but being a black independent, in this game, it's a very different beast, right? And so, but yeah, so really continuing that story, it led me on for the better part of the next decade, working across a series of small businesses or growth stage companies, leading M&A, leading growth, leading revenue in some capacity. Really, what I was doing was putting together this toolkit of operating, investing, and financial experience so that these are the things that seeded or preceded what I would need in establishing my own outfit, right? And so once I got to a point, I think it was about 4 years ago. So in 2020, I established my firm, placed capital in a couple of deals. Again, a quiet LP, so didn't participate in the day-to-day active management, but I may help with a few other kind of ancillary things that may arise. And then about a couple years ago, in 22, is when I knew it was, having exposure in venture, having exposure in private equity. I knew that this was the path that I wanted. And by that point, and this is something that many of you may be facing, is when is the right time? It's never a perfect time, right? It's, you have to kind of assess, your specific condition and situation, but also, think about your skill set and where you can bring, unique value and maybe augment, a playbook there.
So, something you said kind of reminds me of Taurus Richardson, who is also a big player in the space. He's the first Black independent sponsor to build a holding company up, to $1 billion in revenue. And he's like religious about this principle of having an apprenticeship first, right? So don't just hop out there in the game. So you really understand what you get yourself into, because the stakes are so high, not just for
Yes.
yourself, but for other investors that may be coming on board based on your reputation or their belief in you. You kind of didn't do, let's say, an apprenticeship in traditional sense. You kind of built up the skill sets yourself and kind of got comfort with what you thought were the major layers in acquiring. That's, the levers in acquiring. And then the other thing I think a lot of people are thinking, you went the independent sponsor route. You mentioned you placed some capital. This is, I'm assuming, off your own balance sheet. So,
That's
some of
right.
some of this calculus is really based on like your personal financial situation. So you chose the independent sponsor route because you were able to, number one. But just help us think through, your perspective on the trade-offs of the independent sponsor search versus the traditional search. Maybe throw in how you thought about your own financial situation when you were looking at making this move, knowing that
Yep.
there is timeline associated with certain milestones being achieved. Like, kind of walk us through how you were thinking about that at that time.
Brandon, great questions. So that's the dilemma. Which pathway do you choose, right? Do you, do you want to be a funded or traditional searcher where you have a suite of investors, right, that effectively fund your acquisition process. You have a bench of advisors and a myriad of resources that you can tap, or do you go about it as a true independent sponsor? You're funding your own balance sheet. It's a question I think comes down to a few different things. For me, I spent a lot of time, reading and having conversations with folks that have done both paths, right? And truly, there are trade offs to both paths. For me, I was fortunate enough to have the infrastructure to manage a multi-year process, right? Without hiccups to my day to day. So again, it could be, it could be a multitude of things. For me, again, having that infrastructure, but then knowing the economics. So this is where it becomes critically important. You really want to nail the economics and the trade offs of that, right? So just putting it, juxtaposed with as a traditional, you're probably looking at a maximum capture of the cap table, maybe about 20%, right? And that comes with several hurdles over periods of time, you know. So that's just cap table economics. There's also the governance and operating, um, you know, procedures that your operating agreement, right? And that was another thing that, particularly, you may not immediately think about it, but it's critically important. It's almost like a prenuptial agreement before you get into, a marriage, right? It's analogous to that, in that there have been multiple experiences, particularly of Black independent, operators and investors who've taken that path and for whatever reason have gotten pushed out of companies that they've grinded and put together the strategy and playbook, only a month, a year, 2 years down the path, something arises, right? So again, there's this element of not only just limited capture of cap table, but lack some limitations on voting authority and control within that business. So that was really speaking with a number of folks in that space, that became less attractive for me, because again, for the trade off of just stability, comfort, and obviously a bigger team of resources. And again, you're going after bigger deals potentially too, right? Because there's competition, both strategic and private equity, as you go up market. So there are definitely benefits to traditional, but
Okay.
for me, I just the trade offs just
You ran the
didn't make
numbers and
sense.
said, look, the math's better, if I take this approach. I think a lot of people will draw that same conclusion, but then your personal situation enters in, right? So if you're,
Yep.
let's say, for example, married with kids, right? Or maybe for folks that are coming out of MBA programs recently, they may not have
Mm-hmm.
that nest egg, right? So there is a level of skills building that's happened. There's a level of nest egg that's been accumulated to kind of fund you through that search. There's level of
Yep.
responsibilities in your personal situation, right, where your risk tolerance may change. For
That's
you,
right.
you kind of cross the look. I've been in the game. I have some fun stashed. And again, Mario's hit on a lot of levels. His wife is no slouch as well. She's, I don't want
No.
to put this out there, but she's also doing well. So all these things, all these smart decisions you made along the way positions you to be able to pursue what you thought was the best ROI. Let me ask you a question. You
That's
kind of
right.
threw
Go
numbers,
for it.
20% on the, on the average that you're investing into if you do the self-funded search. What should people be thinking about as that number if they're looking at the independent sponsor route and they can actually pull that off?
If you can pull it off, I'd say probably minimum 60%. And it can be, I've seen it as high as 90%,
And
right? Like
that's
you
out the gate with investors. I have an equity
out the
investor.
gate with investors, with investors. So that is that's the material. Now, if you look at size matters, right? Because you can normalize. 20% could be worth far more than 80% of these type of deals. So put that into context. But yeah,
Okay.
the capture of the table is important.
All right, let's talk about limiting belief for a second, right? So one of the things you mentioned, this has come up a lot. You talk to someone like a Taurus Richardson, he'll say 2 million in EBITDA is the minimum, right? Because anything less than that, you're buying basically a job. You're not able to build in the scale that you need to step back, do add-on, bolt-ons, just kind of
Sure.
give yourself room to really be strategic about the business, right? On one hand, right? And on the other hand, people are like, well, I mean, it's easier said than done, right? Because you got SBA loans to help you take it down on your own. So let's talk about
Yep.
limiting beliefs. Through your experience, what have you found to be true, right? I'm looking at you. You got some real serious operator experience. You got the Yale MBA. There's things that people will say, well, you kind of de-risk yourself. So maybe going for a larger target and being able to, talk to equity investors, they might, see these signals and say, hey, this guy's low risk. How much, what help us understand what's real, what's not, particularly when it comes to going for the larger target a lot of people want to do, but don't feel it's accessible to them at the end of the day.
Yeah, I mean that's a good question. I mean, it comes down to a number of things. I think with the bigger targets, obviously you should have more infrastructure, that you're stepping into. Infrastructure is important because you as the operator are probably not going to know more about that business than any, particularly the owner, or potential, leadership of that company day one. I mean, that's most of the case, just facts. And so because of that, I think as you go out there bigger business, there tends to be more systems and, key employees that, are seasoned and, they have knowledge of clients and employees, et cetera. So you tend to be walking into ideally a more stable situation. Now I will say that it can be, there are some idiosyncrasies across industries, right? So you can go out there, potentially a smaller EBITDA company in a certain industry. It may not have, certainly and by smaller, I'm saying, call it. I do believe that it depends on what you want, right? But there's I'm a big believer of, I think it was Steve Schwarzman who says this: if you're going to go after something really hard, make sure it's worth it, right? And that's important because I constantly thought about that quote, because it's hard either way, right? You know, but I still think that, and I know folks that have bought something sub a million in EBITDA. Actually, one of my investors, and he, over a course of a decade, turned that into a 66 times MOIC investment, right? So again, there's a lot of money to be made if you're an operator who can design and create and scale systems. So I won't, discount the work that it goes into that. But again, there is a story. There's certainly some merit to, those sizes. I do think that it can come down to your appetite for investment and risk, right? Because as you go smaller, you don't have the resources to hire or bring on the right folks, because it's a team that, of course, has to execute on this vision, right? So again, you could be sacrificing potentially time and or money, in the process. But again, I've seen success stories for sure.
What about the equity plug coming from the independent sponsor? How much of that do you think is a legitimate limiting belief, which is like, look, I only got whatever, I'm making this up, 250K, right? That I'm bringing to the table, right? Everything else, and maybe I'm open to owning 50% of the business when it's all said and done, on a sliding scale up to whatever I can get. How much of that is real versus, hey, look, go for something big if you believe that's the right thing for you. If you find the right target, you put the right case together, network with the right folks, you can get it done. How much of the equity plug actually determines from your perspective whether or not, it's feasible to go for a larger deal, non-SBA?
I mean, it's not fully, not there's some now to it. But I will say that if you can find a really good deal that is structured extremely well, right? You've mitigated your risk, you've mitigated the investors' potential risk. And as you're interfacing with investors, they can think, you can discuss, and start to open up your your logic and how how you manage to not only source the deal but structure the deal, and they can get a glimpse into how you work, cross table with the sell side, for instance, right? You can overcome a limitation of capital.
Wow.
I can say that if you have a really solid deal, well structured, and you can network, very well, and you're not doing it, from a sense of what can you do for me, but really it's how can we expand the pie. I think people will be more warm to those
Yeah.
opportunities, and I think particularly for our group where again we are this Brandon, you and I, we share this belief and this kind of goal of how can we elevate us, right? And so we have a number of limitations just broadly anyway, right? So I think really as we can, if you can nail the structuring, the sourcing, the deal, the industry, et cetera, and you have a really solid narrative around those components, but also your go forward components, and you can interface with the right investors, and you can tap into the right networks, you can get a deal closed. I
Okay.
mean, I've just through my network, I've had friends that have come to me, and they have deals, really large deals. We're talking 8 figures, even 9 figures, and through that network, and it's a really solid opportunity in a great industry. We can plug the capital, so the capital will follow, a good operator,
Okay.
investor, and deal.
Okay. We'll get to that and we'll unpack that in a second. But I wanted to highlight a rule of thumb that brother Taurus Richardson put out there again, which is you basically need the seller to put up a roll about 20% from his perspective to make the economics of the deal work, particularly if you're looking at, again, that sweet spot of 2 million EBITDA and above. So it's almost like this kind of magic formula where, to Mario's point, you can probably get the deal done, but it's going to have to be structured in a way where you're looking at least a 20% rollover from the existing owners to get the debt and, and the equity plug, et cetera, that you need to make the deal work. Okay. So now let's talk about it. So your search process,
Yes.
you and I have been in conversations as well, where there's different approaches to this. From your perspective, how did you approach it? And if that changed, along the way based on what, you kind of saw in the market, what is the ideal approach that you would recommend to people? If they're the same, just lay it out there. But what is the best way for people to approach their search? What was your criteria? And ultimately, how did you come to that, to that specificity that you put in place?
Absolutely. So, I think, again, if I go back 2 years, 2 years ago, it was, I needed, I wanted, I was looking at certain industries, right? I was looking at fitness and wellness. I was looking at the trades. I was looking at, home services, et cetera, just across, different, avenues of healthcare. So I was looking at a broad mix of industries, and then I had more of a geo target, right? So it was a regional target, and then the next size is a size, right? So at that point, I was looking at probably 750 to 3 million in EBITDA quickly. And so I spent time doing research and, meeting with brokers. And, it's funny because I was having this conversation with a member of my mastermind group yesterday, funny enough. And you just don't even think about it. Why it's probably not a great question to ask. Who's a good broker that I could talk to, right? Like, who's just a good broker? It sounds like it's the right thing. A broker represents deals, or a good banker that, represents deals. And, he or she could just, I can share my profile and hope that they keep me top of mind as deal flow starts to happen. It's not a bad thing, but there's a way you can refine it a bit, right? And so, it went from quickly realizing like there's just this, as much as you have an expanded aperture of industries and characteristics, et cetera, you get inundated with so much information, and quickly you realize that specificity can help you move quicker, right? So really narrowing the gap there. And I say that to say, I'll give you a real life example. Many on this call likely know HVACs, right? Or the trades for the last couple of years have been the buzz, right? And so multiples are out of here. So many things are starting to, happen in that space. I approached a banker that represents deals in, that space. And it was really because I was looking to solicit some future deals that may be coming down the pipe. And from the conversations, I learned that, there are certain certifications that need to be true, or if there's a key person that's in that, or for me to actually stand out in a mix of potential buyers, either I would need to hold those certifications or I would need to bring someone with me, meaning I maybe need to structure an agreement or have some level of skin in the game for that person to join me in this effort of pursuing this deal. And that completely changed the lens of how I approached it. It was, well, I'm not going to be, this is a plumbing company or something, right? Like, I'm not going to be, yeah, I don't even know the licenses, if I'm being honest, right? nor do I have someone, on tap that can help me, as I approach an owner, and ask questions about the industry and really understand the customer profile and all the nuances, but to be an operator day one, right? So, because again, if you think about what does each party care about? The seller probably wants as little risk as possible. Either they want to make, the money and as much cash day one with as little deferred revenue as possible. The banker or broker wants a deal done, and they want as little risk to whoever is a prospective buyer as possible. And then you want to present yourself as that, party for both respective parties, right? And so really that then morphed over time from this wide kind of broad geography, broad industry, to realize that I probably need to, for me to be effective and to really speak the language of those in that whatever the industry I was going after, I need to go deep, and I need to go layers deep. I need to know the macro effects. I need to know the players that operate in those industries. I needed to know the ancillary kind of vendors that consult or that bank or do the books or whoever touches that industry. I really wanted to immerse myself in the world of those, in that space, right? And this could be true for any industry that you're going after, but again, your ability to almost put yourself in the position of someone who's in that world, you're going to pick up things quicker. You're going to meet more of the right people. They're going to connect you with more of the right people. And before you know it, you're advancing the deal at a pace that is completely different from, which sounds great. You're looking at all these industries. You may have some set search chart, save searches, and they're just sending you a bunch of things, and now you're trying to stand out. But again, that person that can go really, really deep, he or she is in front of that, that seller, that broker or banker, they can really, create a story that is really impactful. Moreover, they can analyze an industry and an opportunity very different from someone who's a generalist.
I love that example because specifically with the permits, because it's like, knowing just enough to be dangerous, right? You read and you hear, oh, wait a second, high growth industry, and you're like, I'm ready, right? And then you get it, 0.1%, right? And if anything, the people that really know are looking at you like, this guy has no idea, right? So, to reframe, I guess my first question, knowing what you knew now, how long did it take within your search process for you to get to that point where you said, I need to go deeper? And then once you kind of decided to lock in, first question is, what, if any, kind of tension did you feel in letting some of that stuff go, right? How much conviction did you have in that space? And how long did it take before it was kind of validated that, what, based on the traction, based on the speed, the acceleration in the process, I know this is the right, kind of, move to make?
Yeah, so it took about 6 to 8 months. It took about 6 to 8 months for me to realize, and this is me spending, you're working, but you're also working the weekends. You're traveling, you're visiting sites, etc. So, and you're pulled in different directions, right? So quickly you realize you have a finite amount of time, and if you're independent, you have a finite amount of resources, right? So you got to be real judicial around how you spend time and money and focus and attention, everything, right? It has to be buttoned up. So I realized that for me to actually accelerate what I needed, I need to pick at least two, maximum two actually, at most two, maybe three, but pick industries, have your why, but then be able to go really, really deep at each of those. And so from once I got to that, call it 6 to 8 month period, that and I had this aha moment, I was able to retool certain things. And Brandon, to your question, I didn't care. Like I'm a very, I have conviction in my moves. So once I've made that decision, I knew my why, and I knew that for me to be able to go back to the point of the permits and speak the language of someone in that world, not just how we can grow the business or enhance the efficiency of the business, but really speak the language of that world, which is a unique kind of qualitative aspect of the deal process. It's a psychological part of the process that it doesn't happen in the model. It doesn't happen in the sim. It really is just front line. And you start to get that. That's when, once you can make that switch, you'll be able to make, far more meaningful, hopefully more meaningful connections. And really from that point, still within a 3 to 4 month period after that.
Mm.
So like it just once you lock in, just go, just live in that zone and
Wow.
go for it and like close, go get it. You gotta have that rigor and that grit because it's gonna be hard as hell, but you gotta want
But we're gonna get into that in a second. All right. And I
it.
appreciate that because it goes back to that broker kind of point you were making earlier, which is like help them help you, right? By being specific. If you're like, hey, I'm focused on this specific area, on this specific industry, in this specific size, anytime something like that hits their radar, you pop up in their mind, right? Because you kind of put your stake in the ground there. And so you've claimed that mental space versus I'm looking at, any industry and this, and it's like, you just kind of get lost in the sauce as they see opportunities because, it's like if you don't stand for, something, you fall for anything type of deal. And that's
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 right.
that's kind of where you landed. So we're gonna get into how you caught Pearl Interactive, which you're now the CEO of. But how many LOIs did you put out there? How active were you, in terms of IOIs? What was kind of like your yield rate before you actually locked into Pearl?
Yeah, so I'd probably say I certainly put out more IOIs, right? So, and I do think that you got to get the motion going. Don't overthink it, right? There's a lot of LOI templates, and if you need one, feel free to reach out to me.
By the way, we're putting
Yeah,
together a resource database for the folks in the network. So I will definitely be tapping Mario's best practices, and we'll share that as well with the folks in the Gravy Network. But go ahead.
perfect, perfect. But yeah, so get in the game, right? So see deals, talk to people, etc. Put out some IOIs. You're gonna get some feedback, right? Bake that feedback in. I'm a big believer of get better 1% every day. It may feel some days you're going backwards or sideways, but you're learning something that day, even if it's a slip up or a fail. Something happens, but you're still getting better every day, right? And so, and I say that because really the IOI LOI process is iterative, right? You hope that as you start to see more deals, interface more, more sell side advisors, et cetera, you're able to kind of take in things of structuring or how let me get into the mindset of this seller and what does he or she value the most, what their teams value the most, right? How can I where are the COIs within this deal? You start to really decouple the deal team, and now it helps you narrow and craft it informs how you even write, right? And so you want to put out more IOIs, get some feedback, bake that into your next ones. For me, I actually had probably about 5 total LOIs, right? Five total. So once of course, the IOIs is more than a number, but 5 total. The LOIs are a bit more detailed, right? So you really want to spend time in the deal, in the sim, in the industry, with the seller or sellers are critically important, and they will be important from the beginning to the end to even post deal. So you really want to spend time if you can. Sometimes there's a wall. My deal, it was a unique situation where I had a bit more exposure to the seller, and I was able to reveal more of my personality and my intent, my purpose, and my mission, um, and be a bit more raw and authentic, right? And I think you want to. I'm a believer in putting yourself forward and showing your true, showing your true values, right? Because again, some of the beauty of this market is not transactional, right? I think there's something beautiful about being an independent in this world because it's so transactional with strategics, it's so transactional typically with private equity, but we are a little different, right? We can operate a little different. We have a nimbleness. We can do all those other things too. But I think even how we maneuver is a little unique, right? And that's a superpower. So I treat it as such. I can pull the transactional lever if I want it. I didn't go that route, and that's not my style. But again, you define what that looks like for you. But again, with that LOI, you want to be very, very targeted, very personal to some extent, and specific in how you want to maneuver this business because you got to think about it. You are in a that seller there's a lot of stress. He or she is running a company, been running it. It may be built into their identity, right? To where they don't know what life is outside of this company. They either started from scratch or, very rarely are you buying a company that was acquired before and they understand this process. So this is likely their first or very few deal opportunities, right? So there's a lot of, like education and, kind of assuading that happens throughout the period too. So but moreover, they're the conduit to the team. They assembled their team, et cetera. So there's this delicate balance of, you have to play not only just the financial game, but you got to understand the psychology of the deal process as well.
I love that because one of my questions for you was going to be in a pie chart, right? Let's say you have, knowledge or some thesis in the industry, in the space you're focused. You have your network, so how many folks in the space who might source deals or funding, your resume / experience, right? So how credible are you as someone who can step in and operate? And then seller connectivity. And you kind of answer the question. You're like, look, at the end of the day, all these other things matter, but getting the seller to really see you as the person who's going to take their baby and grow it up to the next level and connecting that with an authentic part about, something that he believes is true about who you are as a person, why you're doing this. That is ultimately what, you felt that little extra time you got with the seller got this deal done. With that, if you had to kind of look at all the factors, would you agree with that?
100%. Your relationship with the seller is paramount, right? Your relationship with the seller and his or her team, paramount, right? To you standing out in the IOI or LOI process. And then by nature, again, you may have a gatekeeper. So that's the team, right? So it could be their employee team or even their deal team. You want to have people that advocate for you in the process, right? Be it either their employees, their advisors, brokers, et cetera. Like you want, and not to placate, not to pander to their liking, but really be intentional about how you foster that rapport.
Yeah. Okay. So, 5 LOIs, a lot of IOIs, 5 LOIs. Was this the first one that you got into exclusivity? They accepted the
No.
LOI? Okay. So you had a
Yeah.
couple of, call it, frogs you kissed. You got
Of
to
course.
Pearl, and then this one, we talked about a little bit of the playbook. Okay. So let's talk a little bit about just mentally preparing people for what this journey is like. You're under LOI, have the clock now started. You got to pull all the pieces together. You got to see if what you're buying is real. You got to make sure people's commitments come through and all the
Yep.
different variables in between, rates changing and
Yep.
business growing. Now they want to retrade the number and you've seen it all. Help us understand, how to contextualize what it's like to kind of be in that process and ultimately, getting to the finish line.
I'll start with this. The process is hard as hell. Like it's it is single-handedly the hardest thing, and I've done some hard things, but it's single-handedly the hardest thing I've ever had to do because one, it's so stressful in different ways. Um, it's and the margin of error is typically so thin, right? And so, who cares if you didn't know it? Oh yeah, it just cost you a lot of money, or you blew up the structuring. So you don't know this, but it's gonna affect, even how you engage lenders and debt providers, or it's gonna affect how, and this is down the path. So you're not even thinking about it right now, but it will touch your investors if they're even interested, right? So again, it's so, and don't even get me started with the sell side, kind of navigation, because there's so many things that come up in a deal, and no deal process is like smooth, right? So just kind of have that as the expectation. What I will say is your ability to be really organized, and again, go back to that, get better every single day, like learn from every mishap, mistake, you know errant comment, whatever, like learn from it and bake it into the next day, because you'll need all those learnings, plus the goodwill that you hopefully shore up with the seller and the sell team, because over time you're going to spend that. There are going to be some challenging parts of the deal where it's like, we're not friends right now, and it's like, we got to get through it. But right now we're at a standstill, and, you got to figure out how to maneuver that. From a timeline perspective, a deal is tough. I mean, it can be, you can be working every day. Like, I think I'm taking my first day off this week in the last year. And this is weekends included, holidays, doesn't matter, Christmas, New Year's, 4th of July, it doesn't matter. Like, it's so time intensive. So really for me, I'm a big proponent of being very organized and keeping certain things standard. I believe in mental health, and exercise and wellness. So I eat a certain way. I want to work out regularly. When I can, I try to carve out time for friends and family. Those things, keep the things that are critically important to you baked into your life, because again, it's going to be so hard, and you're going to be, and again, we all work in the same 24 hours. So you're going to be pulled in so many different directions where, my sense is, or my, kind of concern is, if you are so far removed and so engulfed in just the deal, and it's the only thing that's in your life, you're going to, it's not sleeping the right way. You're going to, you're not going to, it's just going to, that stress will start to permeate other avenues of your life that you really do have to, to some extent, compartmentalize it, right? But Brandon and I were just joking about this about an hour ago. I tend to have a very level, kind of, maybe stoic, kind of presence, because I'm used to, I for whatever, I enjoy, some level of healthy chaos, right? But even for me, I can tell you there were moments of of peaks, right? So I would expect, it's going to be tough. It's going to be challenging, but nothing worth having is easy, right? And so just know that, I mean, this is the beauty, and I'll do a plug, and then you're going to do, I'll do a big plug for Nucleus, my mastermind group. Have that core group of people and those affiliate networks that are your root, right? Like, they are your foundation, because you're going to want to bounce things off each other. You're going to want to learn from each other. And you need people, in the trenches with you, or who at least have been in the trenches, that can speak to, certain aspects, right? Because again, there's no playbook for this, right? If you ask me how to do the things that are coming, any of the traditional routes, that are coming out of school, investment banking, consulting, something like that, you got case study books, and you got, modeling class, all type of stuff. You can get, it's 1, 2, 3, you can get the job, right? You can get that path. Here it's a bit gray, right? And it's, how do you navigate it? Who's wasting your time? Who's actually helping moving the needle? So you have to be very scrutinizing, throughout that process too. But I think, it's tough. It's tough. Have your core, have your routine, have have your house in order, your team in order, have your process defined and organized, because again, that's probably the reason why I love chaos is because I can step into these, moments of disarray, and I have this framework, either mental or visual framework, where I can start to organize things in a way to where it doesn't seem as noisy, or it's not as off putting, right? So
Yeah, no, I love that. And I'm gonna open it up. We're at kind of 15 minutes out to the audience. If you want to pop in some questions as a Q&A, I'll make sure I'll take as many of those as possible. But let me ask you a couple questions based on what you just kind of walked us through that journey to get us ready mentally. First off, I mean, I think
sure.
there's something to be said about just being an acquisition entrepreneur. It's wild, right? But it's like life is wild, right? And life is gonna throw you. So it's like there's an element of just living life on your own terms, right? And kind of saying, look,
That's right.
I'm gonna take the hard that I want to hard, the hard that I want, right? Not the hard that's kind of given to me or the hard that, I kind of ease myself into because it's the easy course. And I think that's, that energy is what it sounds like kind of drives you, right? Which is like, I'm ready to play the game. I'm ready to kind of hop on a battlefield, but it needs to be the battle that's worth fighting for me, right? To bring my all to it. So with that being
That's
said,
right.
I was talking to a gentleman um a month or so ago, and he basically went for 3.5 years searching, got really, really close, and ultimately did not get a deal done.
Yeah.
That would make sense, right? And so he ended up folding his search, and now he's kind of going back, licking his wounds. He may, get back in the game, but he kind of has to replenish himself. How do you think straight in a situation where you're kind of in that ninth inning and you're having conversations around valuation and maybe they want to change some terms that are kind of from your perspective deal breakers? How do you know that you're staying true to what a good deal looks like for yourself in that situation where it's like, man, let me just close this thing so I have something to show for it. All the sunk costs that went into fees, all
Ooh.
the time, that my wife is telling me that I'm not doing a date night, whatever it might be, right? How do
Yep.
what's your advice for, folks that are kind of in the game? They might be at that point. Maybe things aren't necessarily looking the way that they know they should, but they're like, what's the lesser of the two evils? Walking away and starting all over again, or pushing through maybe disadvantageously to myself, but at least I can say I acquired a business. Like, help us understand
Yeah.
about that.
This will be a really quick response. A bad deal is the worst decision you could probably make because it'll affect your own well being. It'll affect your family if you got a spouse, partner, etc. Um, it'll affect the employees that are a part of that affiliate. You never, never, never want to do a bad deal. That said, I know how it is when you're dealing with chaos at the ninth inning, right? You're like, damn, I got from, we didn't rounded the bases. We didn't, we right here at the closing mark, and y'all threw this out there, or this, you're trying to retrade the deal, or oh, you're not agreeing to the things that we already agreed to. Those are, it's a very, very tough, dilemma to navigate. And I think, again, going back to that foundational core of people that are in the game, you can't talk to your maybe if you have it, but most of the time you're probably on an island. It may be a handful of people you even know doing this. That's how like few people are doing this. I think I saw the report, what, 150, total in the country, right? So it's so few. I mean, it's getting more buzz now, but again, it's so few people that can live in that seat, in that situation. And it is so important to consult people in that situation. Because again, you may be evaluating something that it could be a negotiation, right? How do we figure out a win-win solution? I'm a big proponent of let me zoom out, strip out some of the biases that I may approach, this with. And look, I was hit with certain things, right? Oh, our networking target is double, and I need you to pay. We already got all the money placed, and I need you to give up this extra money. It's all type of stuff that can pop up in a deal, or you're doing some type of 338 election or 336 election or F reorg, or something that again requires you know one deep knowledge. It requires a team, but can be off putting to the sell side, right? And it's how do you navigate these to ultimately get to a win-win. I'm always going to root for the entrepreneur who's gone after it, but I'm never going to discount the person that has walked away from the deal that would have put them in an adverse scenario. You never want to do a deal that's bad because the ramifications are far greater than the upside of just the pride of closing the deal. I don't give a damn about closing a deal. I want to, you want to make sure that and your team and your everyone that's involved, you're in a position to hopefully win, right? And that's the thought.
Yeah. And I think you mentioned this before, but I think that's why it's so important to have a peer group of folks that can hold you accountable in those times where it's hard to stay clear-minded, right? Because you're tired, you're frustrated, you've been in the game for a while, and you start to kind of maybe bend on some of those things that were non-negotiables, at an earlier point. So I appreciate you shouting out Nucleus. Look, Gravy's about changing the face of ownership. We're playing a long-term game. We're on the ground. Right now, we're piloting Nucleus, which Mario's a part of, which are mastermind groups where folks are focused, like really locking in and focused on achieving this goal. He's in one where folks are, focused on acquisition entrepreneurship. He, recently crossed that threshold. And so now the support he's looking at is, balance, right? Now he has to go look at, visit clients and build relationships with folks all over the country, right? And then he still has to kind of stay in tune with his home responsibilities. He has a lot of folks hitting him up saying, how'd you do it? How'd you get it done? And so, we're partnering with folks like him and others to bring those insights at scale to the folks that are serious about it. So Nucleus, the bar is high, because we're looking at success stories. That's what we want. We want folks like Mario. And, even like you said, we have to walk away because something doesn't make sense. That's okay. That is just a stepping stone to the success story. So it's less about, the factors that are outside of our control. Is more so about the focus, the locking in, kind of making sure that you're doing the work that ultimately will lead to, the outcome that is going to change, generational wealth, going to change, not just the situation for yourself, but for your kids, kids, et cetera, et cetera. Okay. With that being said, now, my friend, you are the CEO of Pearl Interactive, $50 million company. This was what you would have dreamed would have been the case 2 years ago, and now you're here. So I would love to hear, what does it feel like to be in that seat? What are the challenges that you're feeling kind of being in that seat now? How are you thinking about recalibrating from search mode to now CEO mode?
Yeah, so first I'm excited. I mean, the work doesn't stop, right? It's crazy because it's just sequence. It's a different type of work. So when you're in a deal, it's a lot of negotiation, it's a lot of persuasion. In a lot of ways, I think the deal process is somewhat indicative of what you'll face as the chief operator of the company. Because you think about that transition, immediately we closed the deal. I was on a plane, and I had to meet the staff, right? And my company is larger. We have 1,300 employees across 30 plus states, and so with leadership kind of dispersed throughout. So there's a lot of fear. There's a lot of uncertainty, right? Like what's happening? I didn't know a deal was happening. I didn't know an acquisition was happening, or am I safe, right? And so again, this is where if you think about the most important things in a deal, particularly in that transition, you're spending time re-recruiting, those employees, right? You need to, you want to get them aligned, right? It's soft, right? And you may have to say the same thing multiple times, right? And I think I wrote this down from a recent conversation. But really are three things that you want to be. You want to be honest and transparent. You want to be visible, meaning, you have to be seen, and you have to probably constantly share your story, your why. Why are you the person that has now acquired it? What are your goals? What do you want to do with this? Right. And you got to say that, across the employee base. You also got to tell clients that. You got to temper it in how you share it, right? Because clients, they hear growth and, efficiency. They think about quality control. Your service is going to suck now that, you're so worried about growth. You're not even caring about us in the same way, right? So again, honest and transparency is the first, being visible. And then lastly, setting a clear vision as the leader and steward of that company, right? And so, what my days look like now, we're still calibrating because, it's a lot of back-to-back meetings. It's a lot of travel. I'm probably traveling multiple times a week. It's a lot of furthering, ingratiating myself to the leadership team because of the structure that we have. I need disciples. I need advocates. I need people that's on my team that can speak for me when I'm not in rooms or not physically there, right? So it's a lot of stuff like that where there's a mix of the qualitative aspects. For me, I've been in this deal, I feel like almost a year. So there's just some imminent things that we want to address. So you'll realize that there are other kind of external teams that you're putting together, consultants, advisors, et cetera. You know, that you're going to likely want to pull into the business to start to affect the strategy that you intend to do, right? And so you have that aspect, and then you as the operator, you want to be on the front end of the clients, right? So I'm doing a lot of client meetings, and ensuring that one, everything, the efficacy of our delivery is there, but then how can we further expand these relationships, right? I'm a big relationship guy, and so I got a road shows pretty much for the next 2 or 3 months in DC and New York and California and Alabama and Kentucky. I'm all over the place, but it really is to ensure that our clients are heard. They hear from me first. They have my my direct contact information. And again, that's the level of personal touch that I care about. And they appreciate it as well, right? And so it helps to have a really strong team that, again, because you still have that time, that limited 24 hours in the day we all work with, right? So just kind of being smart about how you spend that time and where you invest it, is critically important.
All right, so I want to get folks on the line excited, and I don't know if you want to put this all the way out there, but you mentioned as you were kind of meeting with clients and kind of reviewing the business, you saw an opportunity to potentially grow the top line over a period of time that's interesting. I think it might be
Yeah.
motivating for folks to hear once you're in that seat and you identify other value creation opportunities that maybe you didn't have the insight into when you were doing your underwriting on the deal. Can you just share a little bit around what's exciting that you're seeing out there for Pearl?
Oh man, it's so we landed two clients, in Q4 last year that, again, this is where the timing of the deal matters too. So these are actually hitting revenue this year. So barring no new business, we're already up 20% year over year, right? So that's one. And then I'm a sales guy by heart, right? Like I'm a finance guy because I can understand that piece, but I enjoy the front end of the business. I enjoy deals. I enjoy really affecting the front end of our process, and then refining the back end. It's the operational components to ensure that we have the readiness to take on this net new work. So, I was in Portland a couple weeks ago, and there's some, so my business is healthcare focused. We do have, we do have, it's largely healthcare focused, right? We do health and beneficiary services. We do mental health and behavioral counseling and therapy. So we, these are our verticals, right? So we're working a lot with, medical specialists and physicians, et cetera. And so there's some avenues potentially, of joint ventures or strategic partnerships that we are in conversations and pursuing. I even say within the next, couple of years, there could be some additive, acquisition that can augment our playbook, right? And our infrastructures. We think about growth for the firm. For me, I want I've shared with the team that and everyone's excited about it. So set that vision and set a very achievable but audacious vision that helps people think out there. And then it's like they start to percolate. How do we get there? We've never been there. How do we get to that destination? And empower people to move towards that North Star target. I love that process, right? So you have to set very, very clear, North Star, and then identify your folks and your team, be it internal and then the external partners that can help realize that vision. That's a lot of what I spend time doing. But the team is fired up. I mean, we want to double the company by the end of 2026. Right now, we have the CAGR and momentum to get there. likely organic, but even with the augmentation of some acquisition, we certainly can get there.
That's incredible. I know we're at time right now. I was not able to get to every question. One of the folks on the line had a question around investor selection. How did you target folks and ultimately say no to some because they weren't the right fit for you? Maybe we
That's
can,
right.
if we got to go, we can follow up on that one offline. I'll make sure, Dean, we get that answer
For
to you.
sure.
But what I want to do is, and also I want to kind of get some of your daily practice. You're a creature of habit. Would love to understand what your routine is. What are some books, resources that you kind of live by? We'll follow up with that one offline, as well as some of the
Of
resources
course.
helpful to you along the way. But with that being said, man, we got a lot of ground covered in this one, man. I want to say congratulations again for what I feel like is inspiring the next generation for you and your own family, but also acquisition entrepreneurs within the Gravy Network. Folks ask kind of more about Nucleus. I put the link here for folks to explore it. There is an application. We're not just taking anybody. We're trying to focus on creating, like I said, a high caliber of folks as a critical mass like Mario. So with that said, Mario, man, thank you for taking the time, my man. We're going to get this recording out to a lot of other folks in the network, and we'll make sure that we're partnering with you to kind of share within your busy schedule what you're learning along the way and what can help other folks who are looking to follow in your footsteps to acquire a business of scale, man. So with that, we will adjourn. Thank you, my man. We'll talk real soon.
Thank you.
All right, take care.
Thank you.